Presenting now is ECS Capital Partners, a venture capital firm investing globally in innovative seed and growth stage deep tech companies, promising high financial return and positive human, social, or environmental impact. Here to talk about this further is founder and managing director, Charles Sidman.
Hello, I'd like to tell you about ECS Capital Partners, a venture capital firm specializing in high return portfolios of early stage deep tech impact investments. I'm Charles Sidman, the founder and managing partner. What we're going to go over in the next few minutes are 3 points. First of all, we're going to talk about this unique and attractive asset class. It has published returns of 25 to 30% or greater, which are uncorrelated with most other asset classes. Secondly, we're going to discuss that it's difficult to utilize well. But third point, ECS Capital Partners is here to help. Now, at the macro level, who are the players involved in the ecosystem? First, we have the entrepreneurs, who are the eternal engine of economic development. Everybody agrees that they produce the wealth, the jobs, the taxes, etc., which governments and society so value to increase their standard of living. And then the third component that we're going to talk about most today, which is us, the investors. We have the opportunity to get these wonderful returns and to do good and doing well at the same time, if we can do this effectively. Now, to talk more about the investors, what are the problems that investors face? First of all, we have the issue of non-participation. It's estimated that fewer than 1 out of 10 investors who are qualified to participate in this asset class actually do. And even larger investors, such as family offices, often do not participate, citing risk, complexity, inefficiency, or the sheer work involved. Secondly, we have people who participate ineffectively. There's lots of issues that confront any investor in this asset class. Finding enough high-quality deals, particularly if you operate in a particular geography or basically accept whatever passively comes in the door. There's a lot of expertise required, technical, legal, financial, et cetera, to evaluate the deals. There are issues of how much financial resource you have as to whether you can participate fully. And in the end, a lot of participants begin to play a role here, participate, and they get turned off by the amount of time it takes to realize the returns. They get disappointed and they go away and we lose them. So why should everyone have to do this for themselves? We all want to drive properly maintained autos. We want pilots to fly us wherever we want to go. We employ accountants to do our income taxes. We use doctors and lawyers to handle our medical and legal issues. So why should investing be different? Does everyone have to do it themselves? No, they do not. And that's where ECS Capital Partners comes in. We are one solution to this problem. We have a dual investment thesis of financial return plus positive social impact. We guarantee all of our participants a diversified portfolio of the best deals. We have a formal asset allocation strategy of making lots of initial investments and then putting more and more money into only those that are progressing well. This amounts to a very effective search strategy. It also approaches the ideal of what people often ask for but never actually have had access to before, of an index fund for this asset class. It's not really an index fund because a true index fund has the dogs as well as the stars. We try to avoid the dogs, so I call this an intelligent index fund. And finally, we operate with high degrees of activity, diligence, and humility. Now, what are the secret sauces that allow us to do this? First of all, an incredible network that we're very active in trying to develop and utilize, global. Second, we have a structure that allows participating investors to individualize their portfolios. Third, the return waterfall when they get their money back is highly investor friendly. Fourth, we are an evergreen fund. It will last forever. We hope for a long-term, mutually beneficial relationship with each investor. Next, our larger investors have the opportunity to super invest in particular later round deals of particular companies to which they resonate. Unlike most venture firms, we invest in both private target companies and public target companies. We've had wonderful success with both of these classes. We have the technical investment experience and resources to do this well, and we're organized according to a section of the US law called 506C, which allows general solicitation such as we are doing here. What does this produce? Well, it produces an opportunity for all accredited investors to participate in this wonderful asset class. Our investors can take either a passive or an active approach as best suits their style and interest. All of our investors will be investing in several hundred companies, and there's only one investor certification when you enroll in our fund. For non-US investors, there's a bit of regulation called CFIUS, CFIUS, which can prevent non-US citizens from investing in US companies. We provide a firewall that allows this. Anybody can invest in all of our companies. And finally, our goal, which we cannot guarantee, is to return tenfold an investor's capital in 10 years from investments with positive impact. What could be better than doing good and doing well at the same time? Now, how big is the opportunity here? Within the United States, and the United States is only a fraction of the entire world, but within the US, there are more than 4 million accredited investors with over $10 trillion of available assets, mostly underutilized. Several hundred thousand active angels within the US invest about $30 billion per year. We work with this community to find and invest in the best opportunities. And the later stage venture capital community invests about $150 billion per year. They are also our partners and somewhat for deal flow and certainly for co-investors. We integrate and synergize with all of these communities. Now, who is behind ECS Capital Partners? Primarily, I am the founder and general partner. I'm Harvard educated from bachelor through doctorate. I got an MBA at University of Cincinnati, where I also taught, and I studied complexity science at the Santa Fe Institute. In all, I've had more than 50 years of academic and commercial experience in computers and AI, and then biomedicine for most of my career. For more than 20 years, I've been investing in early stage companies, about 100 of them so far, with gains ranging from zero, like all investors in this class, to over 30-fold return. And to give you a little more detail on that investing experience, since 2010, I've made the following early stage investments. About slightly more than half in the field of health, slightly more than a quarter in sustainability, materials and energy, a smattering in food and agriculture, fintech, communications, etc. These 40 companies so far have had 12 exits for an average of 5.5 times return, and many of them have not yet reached exit, but they're doing exceedingly well. So I'm very happy with this collection of investments. Now, what's the business model? The ask. We ask for a minimum commitment of $25,000. It can go higher. If it reaches $250,000, those investors get staged capital calls and the opportunity to super invest in particular companies with later and larger rounds. We operate in a industry standard 2 and 20% fee structure, 2% management fee, which covers all of our expenses, and 20% carry to the managing partners after full return of capital. And this is calculated on an overall portfolio basis, not investment by investment. In return, our investors have all of their capital invested. They receive a preferential return of 8% per year before the general partner receives any carry. Everybody gets a balanced multi-stage portfolio organized as follows. Approximately a quarter of their funds go into several hundred initial investments, carefully selected, about 1% of the companies that we see. Another quarter of their funds go into a subset of those initial investments for expansion when it's warranted and they're flourishing. And another quarter of everyone's funds go into 5 or 10 growth acceleration investments that we think will end up being unicorns. We keep the last quarter of everyone's capital for reserves and special situations. Where are we in our journey? Well, we're now seeking soft circle commitments. About 1 million total has been committed so far out of 100 million maximum sought. We anticipate the first capital calls and start of investing middle of this year. So to summarize, we have a dual investment thesis of financial return and positive impact. We seek and operate with the best opportunities globally within this early stage deep tech asset class. We make this asset class equally accessible for all of our investors. We have a very investor favorable and customizable structure, and we are a one-stop shop for this asset class. To summarize, we hope to work for and with all of you. These are some contact details, and I'd love to have further conversations with any or all of you.